lineup, right? This is the lineup. And so everybody knows where we're going today. Guy obviously is on deck. He's waiting for us to give him the mic right now. Jeff Gibby's coming over from Metastock. If you've not watched that platform before, we've been trying to do that technology piece every day in here. And that's what Jeff's going to bring to the table. It's going to be amazing. So make sure you're here. Steve Bigelow, if you don't know that candlestick guy, you're missing out. He's on deck. After lunch, we're coming back with Keen, Busby, Bob, Ben, and we're going to round today out with Brian Fouts, who's going to be talking about how to make money with your money, using things like your bank, your retirement, insurance. He taught me just one little thing a couple days ago that it was, I mean, to me, that one little trick is going to make the difference in what you do this year with your money. So we have just a power lineup again today. What can I say?
What can you say?
And we kicked it off with 10, so hell yeah, right? That's a big hell yeah.
I know. It's tremendous. Well, I tell you what, let me give it a little brief introduction to Guy here, because we're delighted to have him as our next speaker. Guy Cohen, he's going to be doing a presentation that he's calling the low risk, high reward earning strategy that every trader should know. Now, Guy has been associated with Westmark Trading for a number of years and is a seasoned trading pro and a popular author, commentator, speaker on financial trading. He's authored 3 best-selling books on trading and regularly is asked to share his market expertise and insights on CNBC, Fox Business News, and other prominent media outlets. Now, in today's presentation, he's going to share why upcoming earnings season may bring historic opportunities. So I'm interested in that. A low risk, high reward strategy for today's volatile markets and how to take advantage of enormous earnings potential without taking big risks. And I think that's a theme you're going to hear from so many of the presenters today, Jeanette, is that they're saying there's opportunities out there without having to take big risks.
That's
and this
right.
is something Guy's going to focus on. So with that, let's welcome Guy Cohen to the summit. Guy, good morning. We're delighted to have you here with us.
Can you hear me okay?
Yes.
Yes.
Okay, and put the video on as well. Now I would do the video thing like Marcus did, and boy, that's a tough one to beat. But
look, I know, I'm like, I want to do that.
But I just got a couple of things. I've organized in my whole community that we get fiber to the door, but because of lockdown, they've gone right up to our front patch, but they haven't got that little last bit in. So I would love to do what Marcus did next time. Once we got that little extra piece of fiber in, then I'm going to do that too. Just do a little fireside chat type of thing, but just to sort of
a little fiber, just a little more.
Yeah,
fiber.
it's all I need is a little fiber, and then I can do the fireside chat like Marcus did, because I really like that kind of. I'm more comfortable with that. But if just to set the scene, it's a beautiful day here in London. And underneath here is a pair of Bermuda shorts, or no, surfing shorts, just so you know. So I'm in my trading gear, surfing shorts. And underneath that is my beautiful little dog, Zippy, who is always at my side. And if he wants to come and say hello at some point, I might put him on the screen, because my members always want to see how Zippy's doing, and that's not a euphemism either. So anyway, just so you know, anyway, but Rolly, we've kind of connected, but I never actually saw you before. So now I know, now I can put a face to the name. And
so what do you think? It's a pleasure.
I'm tempted. I gotta say, I'm swaying.
That
anyway,
is great.
Did you tell them about me? I don't know. It gets, the more people get to know me, the worse it gets. But
it's so fine though. We adore it.
We adore it.
We did my Miami event recently, and after it, we did an after party on Zoom, and I ended up, because it was 3 a.m. my time, because I did it from 2 p.m. to midnight my time, so we were on the Miami time zone. I just fell asleep in the middle of my own event, with an ice cream on my chest, apparently. So.
Oh my God.
Anyway.
Video, please.
Unfortunately, I don't think this one's going to be nearly as entertaining. But anyway, I want to say thank you to you guys. I got to say, you guys have put on something very special here. And I love all the little effects you've got behind you, with the group, with the whole charts behind you and everything. And it's a very great, really high quality event, and very honored that you would include me in that. with my strange
course.
English accent and everything. But just before I do begin, for those of you who think I speak a little funny, everything I do is only US markets, stocks and options. That's all I do. So don't let the accent put you off. And if it does, well, just think of us as the 51st state and then you'll be okay. Because that's the way it's going to go anyway. So anyway.
Right. Take it away. It's all you guys. You have 1 hour.
Thank you. Well, thanks again to TradeThirsty, you guys, and to Westmark for having me on board here. And again, that's exactly what I'm going to do. I'm going to talk to you about really what is my favorite strategy of all, low risk, high reward earning strategy that literally every trader should know. Once you know how to do this, it really will change the way you approach trading, because you'd be surprised at how much of the time that you can do that. So what we're going to be talking about is taking advantage of earnings season. I'll tell you exactly why I'm going to do that, but without the stress, without the guesswork, and without the unnecessary risk. So here's a disclaimer, which I won't read out verbatim, but you have a few seconds just to read this, because we might even go through a couple of stocks that are setting up already right now after this, well, during this particular earnings seasons. But everything I'm talking about, just for legal reasons, I have to say, are not recommendations, etc. You know the form on that one. So what we're going to go through very quickly today is traditional approaches that you might know about trading earnings, and how then the low risk, high reward strategy was going to work, when to make the trade, exactly when and how, what the setup is, how to get involved, walk through a few trades, and then a little known tool for increasing the probabilities. This is a mathematical situation there. And then how you can get those trade opportunities literally on the house.
Guy, are you gonna, I'm sorry to interrupt, but are you gonna share PowerPoint, or are you just gonna talk?
I thought I was.
No, see, that's why I stopped you, because I feel like you were
man, why does this always happen? What do I need to do?
Mouse around by where our video is, where our names are, and the drop down will come down and it says share screen. It's got a green icon on it.
There you go. I've already kind of eaten into the presentation here.
There we go. I see it. It looks magnificent. Go ahead.
Can you see everything now?
Yes,
you got it?
Great.
All right. Well, look, I already went through that. So you know what I just said. So I'm just going to whiz through the charts again. We did the disclaimer. Actually, we'll just let you see the disclaimer for a few seconds, but we're not making any representations on buying or selling advice. We have to do that for legal reasons, but we will probably look at a couple of opportunities. But today's agenda is I'm just trying to get something else off my screen here, but never mind. I don't dare touch anything on the Zoom thing. Not familiar with it. But we're talking about, the traditional approaches you may have heard to trading earnings, and how my particular low risk, high reward strategy is going to work, when to make those trades, how to make those trades, walk through a couple of examples as well. A little known tool for increasing your trade probabilities. Everything that I do is based on maths, based on proper testing with Wall Street and hedge fund quantitative analysts. So we have a very serious rig of analysis and research where I come from, and how to get my trade opportunities literally on the house. So that's where we were caught up to. Didn't miss that much so far. But imagine if you had predicted the main part of the 2020 market sell-off. So this is kind of what you're talking about. This is what happened to the S&P in late February, early March. You see the setup there. Looks pretty nice. I've drawn it over. And that's the Dow, or the DIA, the ETF for the DIA. And there you see the same again with the Russell, and pretty much the same again with the Qs. So all of them looking exactly the same. Now, wouldn't it be nice if you could have actually said, look, this is likely to happen? And that's what I did do. On March the 2nd, your time, March the 3rd, my time, so 12:17 a.m. my time. So after the close on March the 2nd, this is where we were in that whole, what we call a waterfall setup. This is where we were, still on the way up from there. And I said, this is a distinct possibility. And I drew it there because I was on my tablet at the time, and I just wanted to get a message out for everyone that was watching, just in case it happened a little quicker. And of course, that's exactly what did happen afterwards. It fell off in the steepest and biggest move of that whole crash, if you like. Now, what about the 2015 market sell-off? So I got a little arrow here, because at about that arrow, just about a week before the flash crash of 2015, here's what I said. I said that since April, the markets aren't very helpful. And then I go, you need to be aware because the markets can flip at any time. We've waited for months. If you don't want to miss it when it happens, I would say we'll have at least a couple more weeks on this, and then we can reassess when everyone is back from summer holidays. Now, it wasn't a couple of weeks. It was just over a week. And then that happened. And we judded around for a little while afterwards. So that was that. There were quite a few other ones, but what about 2008 market sell-offs? So we're talking about market sell-offs in particular this time. This is back in 2008. In fact, there's still mainly opportunities, but you have to be selective. Part of trading is knowing when to pull the trigger and when not. Here's my prognosis for the rest of the year. This is in April 2008. I think this year will be a bumpy ride. My contacts on Wall Street extremely bearish, particularly late. Watch out for late summer, early autumn. You heard it here first. ... And that's what happened. That was there in about early May or late April, early May. And this is what happened. And look what happened at late summer, early autumn. Down it goes. And you might notice underneath the chart, this little red indicator. Just pay attention to that, because that's also what we're going to be talking about. Everything I was looking at that point in time was signaling that things were not particularly good. Looking at Bear Stearns in particular earlier on that year, again, you see this red indicator, and it's preempting this crash from Bear Stearns, a 90% fall in Bear Stearns. So there's that kind of thing going on, but also some pretty nice things going on. Like before, as Trump got elected, it was flashing blue to say, look, I think we're going to go up at this point, etc. So the technology that I've developed with quantitative analysts has predicted many major market corrections and otherwise, but since its creation, predicted the 2020 waterfall days before it happened, as you just saw, the 215 flash crash just a week before it happened, the 2008 crash. And what is the important part about this? This is down to earth stuff. We're not talking about crystal balls. We're not talking about weird lunar cycles or, weird sort of functions of nature. We're just looking at a very simple interpretation of demand and supply that is pretty unique to us. And what that means is that you can be prepared for the next big move, whether it is up or down, when it happens, and you don't have to be taking crazy risks before that time. And that's why people like Martin are getting big wins with this and big win ratios as well. And again, just a couple of things just to set the scene for you here. This is people who are involved with me. They can WhatsApp me as well and show me their winning trades and how well they are doing as well. Now the WhatsApp thing is getting a little bit too much sometimes. I can't have hundreds of people doing this, but it's pretty cool when people write to me and they tell me how well that they are doing with big win rates and big track records as well. And again, there's a lot of money being made in ways that people had been failing before, like Roger, like Kyle, and now are consistent winners as well. So there's some pretty big wins here. I won't go through all of them. You just need to know these are real people with real accounts, and they struggled a lot before they learned exactly what you're going to be learning today. And there's just literally dozens and dozens of them. So just a little bit about me. I've been at least 24 years trading properly. I think, trading seriously. I really started when I was actually 21 years old, which is a long time ago now. That's 28 years ago, which is pretty depressing. But, in terms of really taking this seriously, doing the research and being actively involved in trading, well, it's been about 24 and a bit years from that one. I actually have 4 best-selling books, not 3, but they're published by Financial Times, Prentice Hall and Wiley, out of New York as well. So again, get the accent. I've created software, and it's been licensed by the New York Stock Exchange for 9 years. Services I provided, analytics to the International Securities Exchange. I'm also one of the only people you'll hear who actually runs money. My algorithms run millions of dollars of money for professionals in the US as well for their clients. So they're using my technology and my algorithms and my systems as well. So it makes me a little bit unique. So I have a very diverse interest in what goes on with the markets, not just with what we're talking about right now, but also with my professional clients as well. I'm also the founder of OVI Traders, and what we do is we provide the systems and the tools and education and resources, not just to professionals, but also to you guys, because at the end of the day, here's the interesting thing. I am you. I am a private home-based trader as well as the professional things that I do as well. So the things that I'm showing you are the things that I use, and I put everything into myself. So we're all in this together. Now, where it began was really unfortunate, but it's kind of, making lemonade out of lemons. So I was very, very sick when I was about 23 years old. Back in 1994, I got this horrible thing called ulcerative colitis. It's a bit like Crohn's disease. I was in a very, very, very bad way. You can even see this picture of me at the time. Now, I threw away all pictures of me, not thinking that anyone would want to see them. But I am seriously, seriously thin. That's a quarter of my body weight gone at that point. Anyway, long and short of it is that I got well using some interesting techniques, and I was greatly helped. And then I went on to help a bunch of people as well with it. I wrote a book about it, and I did some other bits and pieces about it to help other people. In fact, some people get to know me in trading because of the help that I've given them in this result. But that was, something I liked doing. And what that illness gave me was this fear that I might have to work from home for the rest of my life. And it was at that time that the internet was becoming very prominent and online trading was becoming very prominent. And I was already interested in finance. So this was something was a bit of a gift to me because I was already interested and I was already doing my financial examinations for the City of London, and that's the equivalent of Wall Street. So I got into it, and I had years of trial and error. I actually got myself educated. I got well from the illness I had. I then went and got myself educated properly. I won't go into the whole story, but I went to a very well-known, well-respected business school in London, right in the heart of the city, right in the heart of the financial district, Cass Business School, specialized in finance, 1996-97. There's an interesting story I have about these two professors who literally just gave me the little hint of what I then went on to develop. But I won't, again, we don't have time to go into that right now. But really that appealed to my nerdy, part of my nature. I am most happy buried deep in spreadsheets, but that's not what you guys want to do, probably what you guys won't want to hear either. And what it meant after a very significant journey of research and of being heavily involved in the markets is the ability to trade for freedom, but also to have a business around it, again, where I serve professionals and serve people like you. And what that enables me to do is to, again, work in my surf shorts and sandals, or in the winter in the slippers, and be able to spend time with my family. I'm doing this from home right now, around my family. And when we don't have things like lockdown, it means we can have a lot of adventure as well. And, whether I'm trading, in a beautiful resort in Mexico, or even placing a trade from a chairlift in the Alps, it's given me an immense amount of freedom to do various bits and pieces, which I guess is why you're here as well, is that trading for you is maybe a necessity, but also maybe a thing that can give you some freedom as well. But it's only going to give you freedom if you do it the right way and you don't be a gambler. So gambling is absolutely not what we do. And this is, by the way, this is my little crew here. This is my little 3-year-old. And this is the one that's about to be born in the next 2 weeks. So the next 2 weeks, I'm doing the daddy thing again. And we're not going to do it again. And this is my firstborn here, who's right under my desk right now. So by the end of our session today, you're going to know how to generate consistent profits with the low risk, high reward earning strategy. You'll be able to go and do it on your own. You'll know how to use data-backed tools as well, if you want to trade with the odds in your favor, cut confusion, get rid of overwhelm. Too many systems, too many things to think about. We'll get rid of all that. Stop the time wasting from your trading. You'll have a system, in short, to actually trade and be very organized about it. So quick question is, how much is $1 trillion? $5 trillion, sorry, how much is $5 trillion? Well, let me just try and emphasize what that is. Imagine if you had a job that earned you $1 a second. And with this job, it would take you, and I think that means about 28, I can't even think about the number per day, but even with that, $1 a second, so that's $60 an hour, $60 a minute, and that's whatever it is, $360 an hour. It would still take you 158,500 years to earn $5 trillion. There's a lot of money, $5 trillion, lots of zeros in there as well. But here's the important part for you. $5 trillion is the average stock price movement during the 4 days surrounding earnings season if you clumped them all together. So typically you have around about a month of earnings, sort of mid-April to mid-May. That's kind of the earnings season we're in right now. And if you were to take all the individual 4 days surrounding each earnings and clump them together, you would find there would be, on average, in the last few years, roughly a $5 trillion worth of move, which constitutes 16.79% of average 4-day movement. It's a lot of movement in a very short space of time, a lot of opportunity there. Now, if you don't have a strategy for trading earnings, you're missing out, but I'm actually not going to be talking about those 4 days. That's another thing. So here are the approaches that you might have heard for trading earnings season. One is trading before earnings season, before the announcement, taking that gamble before. Now, of course, we'll go into that in a little bit, but of course, trading before earnings can constitute quite a lot of risk. You're betting on an event. That can be quite hairy for most people, quite understandably. The second way you can trade earnings you may well have heard of is trading a straddle. So you're still betting on an earnings situation, but you're betting on it going one way or the other. You don't care about the direction. It's a great strategy to play, provided you know exactly how to do it and what the tricks and the tricks are for that. So both of those involve trading before earnings. And the third one I will reveal in just a little bit. So let's just talk about pre-earnings just for a second here. We're talking about trading in anticipation of a big move at earnings, but we don't know which way. We have an idea which way that might be. So with Tesla recently, it went a little bit nutty in the January earnings season, and even in the one in October as well. And you'll notice that prevailing underneath these charts is this blue thing. Blue is for bullish, red is for bearish. And obviously that was on the right side of Tesla, which went just nutty. It's not the usual kind of thing. Now, with pre-earnings, you can make fast profits, but with the higher potential rewards so fast comes significant extra risk, because if it goes against you, and I think we've all been on the wrong side of earnings before, it can get very, very hairy indeed. So it relies on an unpredictable event. Although there's a way of doing it, that's not what we're going to talk about today. Now, what about straddles? Well, this is where you profit up or down so long as it moves enough. And there are other scenarios that we could go into. We won't do just now. But again, can yield fast profits, no directional risk per se. There's other risks, but no directional risk. But you can still lose if the stock goes sideways and there's no actual move that materializes. So again, straddle has its own parameters. Again, not what we're talking about today. But there is the third option of how to trade stocks or options for that matter, in a way that can be good for any market, not just the current market where it's all a bit crazy, but in any market, up or down, volatile or not volatile. And that's why this is so important. Now, in uncertain type of environment like we have right now, it does pay to use a low risk approach. But low risk does not necessarily have to mean low reward. It can be monumentally big reward. Now, my post-earnings strategy is the perfect combination of low risk and high reward, as you're about to see. So if I can just have a look. Now, I don't know how to even look at you guys to see who is here. I'd love to be able to do it, but just give me a shout somehow to say who here actively trades in the post-earnings environment. And I will try. Oh, there you go. I think I can see it here. Who actually trades in the post-earnings environment? If you can actually show that, that's pretty cool. I will have to see and to see. There you go. I am sharing my screen. But anyway, if you do, just make a shout out for me, because this is what we're talking about right now. And again, it is one of the great, great strategies. Here's what we're doing. This is the strategy that everyone should follow. What we're looking at is big moves that are occurring days or weeks after the earnings reports are released. So in the case of Microsoft here, a little chart, but I'll make it bigger later, is we've got a move up at earnings, and then there's a bigger move after that. And even here, there's a move up at earnings and a bigger move after that. That is the move that we're looking to capture after the news, lower risk. And here's the thing, the move in the 2 months after earnings is double the size of the move that happens in that 4-day window around earnings. And of course, you'll say to me, well, Guy, of course, there's more time. I go, yeah, there is more time, but less risk because earnings is out the door at that point. You haven't got the surprise of earnings. So we're now talking about a 2-month window where there is roughly a $10 trillion price move cumulatively that happens. Now, that's got to be worth having a look at. Over a longer time frame, much lower risk. So here's Advanced Micro Devices, a stock that we've been involved with time and time and time again. Now this one, this actual chart was a couple of years ago, but what you'll see here and what you're going to be learning is here's the earnings bell in my charts, and the stock pops up and then it goes sideways. You're kind of getting to see what the strategy is already. And it drifts up and actually goes sideways again and drifts up. And not only does it do it in May to almost double at that time. For this is the May one happening at around $11 and it goes up to 18. But it also happens again in July. Up it goes, sideways, and up some more, sideways, up some more. And there are some key drivers to this that make this pretty obvious that it's likely to happen, or at least more probable that it's likely to happen. And this particular move, if you took both of those, you're almost talking about 9-bagger in terms of result, in terms of a trade there. So $1,960 turns into $18,000. It's a very, very effective strategy, and it happens with big names like Apple. You don't have to be looking around for some weird penny stock type of stuff here. You can do it with safe, good names. Apple, Microsoft, the usual offenders. Here's Apple in November. There it is, up at earnings here. This is just recently up, sideways, and up several times again. So 14% rise might make you think that that's not worth it. 14%, is that enough? But if you trade deep in the money options in a particular way, that can actually be 121%. That was, and 2,740 in this particular case becomes $6,000 before you get stopped out around here. So you see the opportunity is pretty significant. Here's Roku, again, well-known stock. Here's it very recently. Or last year. Again, what you have here is the pop-up at earnings. Sideways, up she goes. And we've got it again in August. Pop-up at earnings, sideways move, up she goes. So a 21% gain there is 238% on that one, particularly in the deep in the money conservative options. $1,920 goes to $6,500. So you get the picture. I'll give you a couple more examples here. Tesla's crazy, and I'm not saying you should do this, but this is just how crazy it can get. Here's Tesla. Just on this one. I mean, forget this one. This one was also one right there. But this one was a 50% move, obviously ridiculous. But again, 50% move turned into a 4x move literally in the space of a few days. Now, you couldn't get the deep in the monies for less than $9,000 for one contract at a time on this particular one because it was, again, crazy stuff, but $9,000 to $37,000 in this particular case before in October, obviously a lot less because the stock price was so much lower and volatility was so much lower. But you get the picture here that this is happening over and over again. Let's go back down to earth now and talk about a stock like JP Morgan. Here it is again. Up she goes at earnings, sideways, and up she goes again. 16% turns into 140% with deep in the money options. Again, $1,230, which is what this one was, to then $2,950. So you see how this works, and it's terrific every time. Now, talking about clustering of particular stocks, this was Bank of America at the same time. Up she goes at earnings, sideways, and up she goes again. 14%, almost doubles money in this one. And you could pick this one up for as little as $350. One contract, $350 on this one, giving you $695 there. But most importantly, or as importantly, is this stuff can go on the way down as well. Here's Ford recently, again in February, but instead of up she goes and sideways with other things going on, which I'll tell you about, this is down she goes and sideways and sideways and sideways and down and down and down each time. This is a stock that collapses by $50. This is Ford, 50% here, and in a very short space of time. But that yielded almost 5x on the deep in the money options, the deep in them, the conservative ones, the safe ones, the boring ones. And so you see the scale of the opportunity now. And, with few contracts, a $2,000 trade turns into $10,000. So what I'm trying to impress upon you here is you don't have to be going for outlandish type of stocks or expensive kind of stocks. You can be doing this with very well-known multi-billion-dollar stocks with low share prices if necessary, and pick up very simple opportunities. And you get to see how simple this is. All you have to do is be patient enough to actually find them. So how should we trade this strategy? Well, many traders use consolidation patterns, and you've seen me draw a few out, whether it was down like this or whether it was up like this, so consolidation patterns, but very few actually maximize the potential of those. Because with the right formula, we can turn a good strategy into something that's beyond good, one that you would really want to use all the time. And just to give you a quick stat here as well, the post-earnings environment, write this down here, happens for 40 weeks of the year out of 52. So that's plenty to keep us busy if you wanted to specialize in one thing. And of course, you're dramatically reducing your risk while we're doing this. So here is the formula for the post-earnings trade strategy. The first thing you need to do is have a consolidation after earnings. Now, it has to have a bump first. So really, it's a bump up and a consolidation, or a bump down and a consolidation, but a consolidation after earnings. And if it's neat and tidy, better it is. Not always going to get that, but that's always nice if you can. Obviously, focus on the trending stocks, hence the bump up or the bump down beforehand. Look at past performance. Has this stock got a habit of actually surprising at earnings and then doing something after? Because what you'll find is, if you look back at several years, you'll find that certain stocks like Apple, like Microsoft, like Advanced Micro Devices have this habit of going through cycles of surprising and then outperforming after earnings. It makes sense. And it's a theme on this one. Again, a lot of stocks you won't have heard of are doing this. That's why you need to look out and find ways of finding them. But a lot of stocks that you do know very well are doing this as well. Use conditional orders. Now, what do I mean by this? This is critical. Again, risk control. When you get that bump up at earnings and that consolidation, don't trade it until it breaks out. Make the breakout the condition on which you'll either trade your long call options or trade the stock itself. This is critical. So to reduce risk, because some of them, of course, won't break out and they'll just drift down. So again, make the breakout your friend on this one. That's it. And use a stop loss as well. That's just common sense. But again, the stop loss is not something you put super, super tight. So I'll give you a quick example of that one. The stock rises. You've got your entry point. Your stop loss is going to be somewhere underneath that consolidation point. It's not going to be too tight. Give it a bit of room to breathe. That's how you do that. And now we can talk also about a little known way how to supercharge the strategy in terms of the probabilities that you'll have. So we'll have a little look at Microsoft here, and we'll just see what's going on with Microsoft. This is back in November and also back in January, and we'll just see what is going on here. So here we've got Microsoft at the October earnings, and you can see it pops up and goes sideways. This is perfect. What you'll also see, though, is the supercharger. Now, what this is here is, well, I'm going to explain it to you in a minute, actually, is the key driver to enhance probabilities. And again, we got it in January. Up she goes sideways, and up she goes more, enough to bank a profit. Now, not all going to go and be 3 baggers or 2 baggers. They can't all do that, but so many of them, a very great proportion of them, at least 7 out of 10, are going to go and do something where you can at least secure a really good profit. So this is the winning formula, and I'm now going to focus on that little known way to supercharge this strategy. So here we go. What we do is we're going to use intelligent tools to massively increase the probability of our success. There are 2 particular tools. One is my proprietary OVI indicator. That's called the Options Volatility Indicator. What it shows you is what options traders are doing and what their sentiment is on particular stocks, and is a proven predictor of the market direction. It is also the thing that we use to manage the professional money on behalf of professionals. So let's have a quick look at what that is. Here is a chart of overstock last year. And all you're looking for is to see, well, look, which direction is the OVI suggesting? And of course, it's really simple because here it's mainly red. And of course, here it's mainly blue. So we're looking for that kind of consistency. And is the stock price mimicking that? And of course, it is. And of course, it is in this particular case. Not going to every time, but we're going to highlight the ones that are, because those are the ones we're going to want to trade. So it's kind of what, a little drawing of the OVI just there. So options volatility indicator is the sentiment and the direction that options traders, large options traders, are trading. And there's a very clear rationale for this. What we're looking for is what professionals are doing in order to build positions. We're not looking for hedging. We're not looking for noise. We're looking for distinct clues of position building by larger entities and individuals who are building positions, not hedging. This is the key. They've got superior resources to do their research, and we're jumping on the back of them to see what we can do that follows them, but in a safe way. That's the essence of what we do. Because if you think about it, it just makes sense, doesn't it? If you think that you could follow people who are more sophisticated than you, who are bigger than us as well, bigger than you as well, and they're doing it and they're putting their necks on the line with leverage and on a sustained basis, then that would seem to indicate that potentially they're building positions and they're using that great research to do that. And that's what we're looking to literally jump on the tail of. So the OVI is the first, and then there's the ability to find where this is going. The Trade Finder software makes it effortless and literally within minutes to do that. So the proven indicator and the ability to find those setups. So how can you find great earnings trades? Well, manually you could go through the charts. That's okay. The problem with going through charts manually is it's time consuming. And how many of you guys have gone through charts and you're going through hundreds and hundreds and hundreds and hundreds in order to unearth the little gems? Well, we've all been there and it gets a little tedious. The second thing you could do is follow someone else's picks. Fine, if they're good. The problem with relying on someone else is that you're relying on their opinion. You don't know whether they had a good day yesterday or a bad day, whether they have an argument with their partner or got annoyed with the kids or whatever they did. And there's a human unreliability when you just rely on one person's opinion all the time. And obviously they might have confirmation bias and all other weaknesses that go in that. The other part of that is that you then have a lack of independence of thought and of looking for things that you might find good if only you had a system. There is no system to following someone else's stuff blindly, that is. Or you could use scanning software. The problem with most filtering software that exists in the home-based trader environment is overfitted. They've got loads of parameters, not enough data, and that is a feeding ground for overly complex models to obscure the lack of really verified results and overfitting. So when you talk to proper quantitative analysts for hedge funds and for the institutions, they'll never go with that kind of thing, and they have very strict criteria on how to analyze whether a strategy has legs or doesn't have legs. And obviously that's the world, it's the other part of the world that I inhabit. So let's just talk about the Trade Finder software. So in my environment, we have tools and we have various tools like watch lists and charts, specific charts. But in this particular case, we're looking at my FLAGTRADER Trade Finder, which is going to unearth these nice little gems. Now in this, you can do several things. You can have a new search, which is nice, or you can click for filters that I have pre-done, or even better, if you wanted to have that independence, you can create your own sets of filters. And of course, what we're going to do is focus on post earnings. So we have certain ones that have been pre-done. So you have, gap down after earnings with negative OVI, or gap up with earnings after positive OVI, etc. So you can do those kind of things if just focus on what you really want to trade, which is great. So here's what happens. You would use that trade finder and you'd get a bunch of results. This one, no one's actually done properly. They've got 250 results. That's not what's going to happen. You're going to get a little small amount of results. But when you go into the actual filters, you can actually specify whether you want a flag, bull flag, whether you want a gap up or down, whether you want a trend, when earnings was. This is the big one for you right now. Earnings in the last 20 days. That's big. Okay, this is also big, gap up or gap down if you wanted to. And also this, OVI is positive, because if we're looking for that, then we're going to get a nice little result set. This is just what's been happening recently. And one of those is HOLX. And just go and have a look at HOLX. It's popped up at earnings and it is already up, and it's still up today, just recently. One of the ones I also mentioned in my last weekend's bulletin to my crew. So that's a filter set. And from here, you can then look at charts. There is HOLX, and you can see exactly what's happened here. In fact, it looked pretty nice pre-earnings as well, because OVI was blue. This is what was happening pre-earnings. Up it went. And here's what's happened. It formed a flag. This is a rogue bar. This is just a weird one. So, you know, if you go and look at my video from last weekend, I said, you know what? I'm just going to ignore that bar as if it didn't happen. So if you do ignore this particular bar, you've got the pop-up at earnings, but you've also got the flag in there. And what you'll see today, if you go and look at a live chart, it's up on the day, or at least was when I started this presentation. Let's have a look. It's right behind me. It is actually up on the day. I don't know whether you can see, but over there is a chart, which you probably can't see. I'll see if I can just turn the camera around, but that's got HOLX up there, and it has emerged from this setup and is already winning as well in exactly the way I've just shown you here. Now, if you were to be able to go through that process, and by the way, the software that I'm showing you here is mobile optimized. You can do this on your tablet, your mobile devices, doesn't matter. You could be in the car, be in a cafe, when they open them up again, of course, and it's pretty cool. So what does it mean? Well, it means you can save time. You can do it anyway. You can have a routine. Having a routine is critical. You can filter for just those high probability setups, post earnings or otherwise, just the ones that you want. So you cut out all the noise that exists there in the markets. Don't miss out on these great setups, again, because they're happening every single earnings season for the month or so after earning, or during and after. So post earnings really lasts for 2 months every earnings season, because as soon as the first earnings is out on day one, in the middle of April in this particular case, through to the mid-May, we've got earnings coming out pretty much every day. And then it's going to last for another month after that. So you've got 2 months of earnings for every earnings season that you have. Pretty good, or post earnings, that is. So you don't have to miss out. You can be busy enough without being crazily busy, and you can build a lifestyle literally around this kind of situation. So these are the 2 data-backed tools that you can start using today: the OVI indicators I showed you, and the Trade Finder software that I also just literally gave a few screenshots. So if you would like immediate access to these tools, and I know that this is an offer, but it is, would you like to try them out for yourself? Risk-free, because that's the best part of this, is that it is risk-free what I'm about to show you. Well, it's a one-time opportunity, because I don't do this, but I have done it especially here for my friend Pat, and this is a very special thing that I'm about to offer you. If you want to come and join, gain access to these special techniques and tools with nothing held back, and for 0 risk, here it is. This is FLAGTRADER. Now, I don't do this kind of event and unleash FLAGTRADER. FLAGTRADER is my flagship product for home-based traders, including myself. It is the one that I use. And as you can see here, by the way, it's nice and mobile optimized. And with this, you can focus on not just post earnings, you can actually focus on other times as well. But in FLAGTRADER, you have a beautiful suite of tools, education, watch list functions, trade finders, and charts, and everything else. And here's what you're going to get. My post-earnings strategy, which is taught in depth. So I've outlined it for you today. I've given, even with that, you have tons of value to go and do these things and observe, and you'll see for yourself how good this particular strategy is. But with it will come my OVI indicator that makes a big difference in the probabilities that you'll have for success. The full Trade Finder software, again, mobile optimized, portrait landscape, bring it around with you any which way you like, which is going to help you find these on a day-by-day basis. But all my other training and strategies as well, not just post earnings. Also, my watch list. You can build your own watch lists, build your own folders in there, and then you can also not just build your own, but you can follow mine. And I have two different types of watch list. I have my static watch list, the stocks I'm looking at pretty much every day because they're proven over and over again, like the Apples, like the Advanced Micro Devices, like the Microsofts, like the Home Depots, like the Goldmans, all of those ones. But I also have dynamic watch lists as well, where you can look at stocks that have been looked at by analysts to outperform, etc. That is a dynamic watch list, which is unbelievable value as well when you see what that is. I also do weekly stocks to watch. I actually do videos, much like you might have seen from other people, but a weekly video, and you're seeing the stocks I'm watching either for an educational purpose or for it's a live actual trading opportunity right now, like HOLX recently, like Home Depot recently, like Lowe's recently. So you will see that, and you'll be able to also look at the archive of how well we have done as well. Now, in this particular offer that I'm going to give, because my arm has been twisted somewhat, because I want to also give you the best possible chance. And again, this is risk-free. You can also have a one-to-one coaching session with one of my top traders as well. So that's on the house. That's on my dollar, that is. And also have access to the members-only training and my priority support, which I think we're pretty famous for, having an incredible, dedicated support team. I'm a huge believer in that. And besides which, you cannot have a software enterprise without major support. So I have 5 full-time people just in support itself, and it works beautifully whether you are experienced or whether you're not experienced, and almost any account size. And I'll tell you why I say almost because if you've got a couple $100 and that's it, that's probably not going to do it. You need a couple of thousand at least. Now here's Mike in Minneapolis. I actually met him on another course in Phoenix, Arizona, and we became friends, and he wanted to try my stuff. So I said, sure, here it is. And he wanted to pay properly as well. And so here's what he wrote to me on WhatsApp. You can see it here, like my weekend video. He said, I had great success today with Enphase, bought in early December, flag trade. So here it is. Can you see it right here? There's flag trade. Now, what you'll notice is this. You'll see the same setup and all this, but it didn't happen at earnings. That's the beautiful thing about FlagTrader, because you don't just have to be looking at earnings. It can be outside earnings as well. So that's a kind of a bonus, if you like. It was a beauty. He says here, been riding the wave ever since for my biggest OVI winner yet. It was a beauty. Looking at my traders, I bought it on the 9th of December, took a first profit target. That's what that means. He's up $120, 120% since. And that was just the stock. That wasn't the options. And if he did the options, he'd be well further up as well. So what else? And also he says last week, SEM, SRX, etc., all doing well for him. So again, a great setup that you could use over and over again. You could literally just do just this in your trading life. Just do these. So if you're able to anticipate also, not just talking about these, but if you're able to anticipate the next major market crash and potentially even profit from it, how much would that be worth to you? Well, I think that'd be worth a pretty good amount if you're able to see what I'm seeing and make the kind of calls that I'm making, but also only participate once they're fulfilling rather than try and gamble on them. That would be pretty cool, wouldn't it? So if you're able to profit in any market conditions with this kind of setup, no matter how crazy, like it's happening right now, you've just seen it with HOLX and others, how much would that be worth to you right now? If you had an experienced coach to guide you through it, how much that'd be worth to you as well? Well, here is the program. It's my earnings, my post-earnings strategy taught in depth, but my other flag trading strategies also taught in depth. My OVI indicator, which again is used by professionals, used to run professional money on behalf of their clients as well. You got that in there. The full, not earnings trade finder software, but beyond that, we're talking about my entire FlagTrader trade finder software, which goes minimum at double what you're about to see tonight. So this is the special thing about it, because this is my flagship. I never put this on an event like this, but I am today. All my other stock trainings and strategies, my watch list of my profitable tickers to trade, plus my dynamic watch list, plus your ability to have your own watch list as well. And by the way, even better than that, you can filter against a watch list. How cool is that? Not just the whole market. You can filter against mine or yours or even the dynamic ones. It's unbelievably cool. Saves you an immense amount of time. Proper game-changing stuff here. And all on mobile devices as well. Weekly stocks to watch. You get my weekly broadcast, seeing what I'm looking at. You get that one-to-one coaching session as well. It's members-only training, and you also get the priority support. Now, total value of that, if we were even to give you the best deal, the very best deal, is 6476. But today it is just 997 for you guys in here only. You will never see it like this. I promise you, just don't see this, especially not for FLAGTRADER. And the link to go to is oviearnings.com/EMC Summit. And what you will find there is not my OVI earnings suite, because that is one. You're actually going to see the FLAGTRADER suite, which is bigger, and it's the flagship one. And that because of the one-to-one coaching sessions that are involved here, and because we need to give it proper attention, I'm only limiting this to 20 members. So if you want this, go get it at oviearnings.com, EMC Summit, and /EMC Summit. And again, it's limited to 20 members. So question for you, or question for me, is it is an annual subscription, and you are, by the way, locked in to a grandfather deal. So this will not go up, provided you carry on being a member. Why is it an annual subscription? Well, as I've alluded to, I have a full-time quant team and a full-time programming team. There's over 5 of us in that team as well. And if you think that quants are cheap, they are not. If you think the research we do is superficial, it is not. We are serving professionals. We're serving you guys. We're serving ourselves as well, because we're trading with this as well. So that's an expensive thing to keep up, but boy, does it provide value, because not only are you getting the research underneath the machine, but you're also getting the delivery. And again, recently we provided this all on mobile optimized software. We never stop. If you look at anyone who's been with me for any amount of time, we're always pushing the needle, always making things better and better in terms of the research underneath it, and also the delivery to make it easy for yourself. And me, I'm a young dad. Well, I'm an old dad, but I'm an old dad to young kids, and I can't always be in front of my screen. So sometimes if I'm out waiting for the kids at school or whatever it might be, I sometimes just need to be a bit more flexible, and I can weave this into my routine, and it only takes a few minutes. But all that takes a lot of development, a lot of maintenance as well. So that's the reason for that. But of course, I'm so confident in it, give you a 100% guarantee. 30 days. There's no one of these sort of shady kind of, well, you can have an extra 90 days or, you know, all this. It's an absolute 30-day guarantee, no quibble, full cash refund, no catches, no nothing. That's how confident I am that you will love this. It's also risk-free. You can even get that session on my dollar as well, because I have to pay my coaches for that. So that's how confident I am that you think you'll really, really go for this. And by the way, if we talk about big money, there's Steve and Vinny. They're making like 50,000, 53,000 on one trade, 34,000 on another trade, but good win ratios, solid 7 out of 10 type of win ratios. If you're looking at someone here who had a horrible experience for 12 years before they found this, well, this is Kyle in Florida. He was losing for about 12 years and then found this one and traded it actually simultaneously to his existing stuff he was doing. And with ours, he won with an 8 out of 10 win ratio. With the other one, he had a 3 out of 10 win ratio and was losing horribly. And obviously has flipped since that. So that's Kyle, a really amazing story from him. Here's Doug. I am no longer fearful of earnings season thanks to Guy's guidance. 8 out of 10 win ratio, and some big winners there. And that was on Boeing. Again, not tiddly little silly stocks. And here's Kyle with Home Depot, 60%, a well-known liquid safe kind of stock. Here's Jacob, beginning out there, £1,600 in this case in the UK from 2 days on trade using the FLAGTRADER rules. Stephen here, this is a really tiny one, and we've seen the big wins, but there's some people here actually use it with some very small accounts. This was a UK one as well, doing spread betting, where you can go with slightly smaller accounts, but this actually meant a big thing to him, because for him and his son, it actually meant food on the table, fuel in the car. So sometimes it means big holidays and cars and whatever, but for some people it actually means more than that. This is Ali Kane, that is. That's another UK guy, 15 minutes worth of work. And then there's Anthony again, 175. So there's some real winners here, and it goes on and on and on. There's some really cool ones in here. There's Kedzie at 200,000. Obviously Roger's down here at 450,000 in profits. An amazing story there. And on it goes. You saw Zoe earlier with the WhatsApp, and on it goes. Literally millions of dollars in profits cumulatively from dozens and dozens and dozens of traders over the years. Now, we're near the end of this bit now. I do want to have some Q&As because it's pretty cool to do that. But I thought and I saw the end of Marcus's one, which is really funny because he pretty much said what I'm about to say. But it wasn't planned that way. This is already prepared. But you often find in these kind of things, you always get some motivational quote from like someone like Mark Twain or some president or some philosopher or big tech innovator or whatever. I don't have any of that. Okay, I don't have any motivational quote at all. What I do have is this, though. This is the one that will make you money and save you money. And that is this. This is what I want you to trade each and every time. Now, if you write this down, this is the thing that will change how you go about things. And here it is, TWYS. It's not actually a ticker. If you try and put that in a chart, they won't come out with anything. But what it actually is this. And I know some of you will have guessed this, but it's the best thing. Oh, I've gone there. It's the best thing you'll ever see. It's so important that you do this as well. So let me write it down. And that is trade what you see. Marcus ruined it for me. Marcus, if you're still here, you ruined it for me. But anyway, trade what you see. Again, not what your opinion is, not what you think. In our world, what does that mean? In our world, it means consolidations for the nice low risk setup with a persistent OVI direction. So if we're going up and sideways, we're looking for a thick or nice meaty blue OVI to say bullish. Say that the insiders and professionals are lining up in a bullish way and with position building. And also the opposite. You saw it with Ford earlier, but you could see it with any kind of oil stock in the last few months as well. It's not uncommon, where this time you've got a trend going down and a sideways movement and a red OVI, persistent bearishness in that situation. That's what we see. That's what gives us the great odds of the roughly 7 out of 10s and sometimes more as well. So when you say trade what you see, whatever your strategy is, that's great, provided that's what you see. But in our world, it's with the consolidations and OVI as well. So this is my non-motivational quote for you. And that's the full stack for you as well. oviearnings.com/EMC Summit. I'm very grateful to have been invited here. I hope that I'll be invited again. I hope I've given you some value here as well. Now, I'm just hoping that you've actually seen my screen, and I'm hoping I'm going to get some questions coming through as well. So I'm going to go here. And let's have a look. Okay, I think I'm in the right place now. How far? Okay, so Tom, good to see you. How far out do you go out with your options expirations? Well, we go deep in the money. So that means you can go as little as 3 months, even less sometimes, but 3 to 6 months is a sweet spot on that one. But deep in the money, looking for 80 deltas or so. Occasionally, and this is a slightly more fun thing to do, is when we do synthetics as well, because you've hedged the time when you do a synthetic. You've also hedged the volatility as well. Did you generate any false positive, says Jack? Is a great question, probably not one that I can answer in literally a couple of minutes. But of course, what we do have behind us, and I insist on this, is because we're dealing with institutions and professional money managers, we have to be able to demonstrate that the basis, the empirical basis of what we do has legs and is not overfitted, not over-optimized. Now, any kind of system has a certain amount of fitting to it, but there's an acceptable level and a non-acceptable level. And we have to be very careful because we have to justify ourselves to family offices and those like. So, I think the standards to which we are applying what we do are on a whole different level to anything that you might be used to in there. Google went out. This is Kartik. Nice to see you, Kartik. I think I recognize your name, actually, Kartik. But Google went out a few days ago. Only OVI thoughts on direction and everything. Let me have a quick look, see if I can have a look at that one on that one. It hasn't sort of been one of my, on my big, this is one of my charts, by the way. The only thing I see on this one is, look, there's a couple of things to this, Kartik. One, it's a very expensive stock, which doesn't suit everybody. OVI is a little bit inconsistent there. I think there are better ones out there, but there are a couple of cool things that I like about it. But there are ones, you can only pick what you can pick. There are other ones in the way. By the way, while you're looking at this chart, look at the correlation here. Look how cool it is. The risk takers in the market here, look, they got the meat of that move. There's the waterfall that I showed you earlier. And look here, they're getting this right. That's a blue OVI, and look, the stock's up and up again. It's a bit patchy, but I guess the move up has been a bit patchy too. So that's just a pretty cool illustration of what I do there. Anonymous says, does it concern only US stock markets? Anonymous, yes, it does. This is another Anonymous. Does the member page show previous performance, or can we add this to our own platform? And sorry, there's another one saying, is the OVI proprietary? Yes, it is proprietary. It's not available. Well, it is actually available, fun enough, on Metastock. So Mark, for you, we do have something with Metastock, so you can get something or other with them as well. Does the member pen, my friends at Metastock, and Jeffrey's actually after me, so he'll thank me for this. Jeffrey, by the way, big hello to you. We need to talk and have a catch up and say hello. Does the member page show previous performance? We're not running it as a portfolio. That's in our professional environment where we do that. This is a discretionary thing. It is me, Guy. Thank you for recognizing. Says Kartik. Good to see you. You see, this is what happens. We have a bit of a thing going, my members and I. I don't know why, but we just do. Let's have a look. I've got a few more. Is guarantee no questions asked? Yes, anonymous, it is. No questions asked. OVI stands for Joanne, Options Volatility Indicator. For you, that was Joanne. Let's have a JC. On average, what is the typical consolidation period? A few days is that one. Then we've got, that's for you, JC. Levi, nice to see you. How will your system alert us of potential market sell-off coming, or does it send us an email tweet? Not exactly in that format, Levi. What it does is that you'll recognize the signs, I think is more the point there. And obviously you've got my weekly and more commentaries on that as well. But you'll see what we look at. You'll trade what you see. And if you see the thing going down with the red OVI, you'll see it. Market doesn't pop down just one day. It takes a little while. Charlie says, review Twilio. I will if I get time, but I may not get time here because I think I'm already a minute gone there. And Nilly says, is the one-to-one session a single session? In this particular case, Nilly, it is. And if I do have 1 second to look at Twilio, just because, unless I get kicked off by Jeanette, let's just have a quick look for you just to give you a little bit of value. That one, yeah, nice. It just needs to consolidate after that. There's Rolly looking there. But what you see here, guys, very clearly, I mean, this is just a good example. Good OVI, correlating nicely, just breached its 200. It's popped up at earnings. It needs to go sideways now. And by the way, you want to see how effective this is? That's a red OVI correlating nicely with that meat of that nasty move down. And by the way, formed a flag while I was at it, just for good measure as well. So that's a bit of off-the-cuff stuff that I hope shows you quite how good that is as well. I can see Rolly looking and Jeanette looking. It's time for me to vacate, I'm sure. Oh, and I do teach options. Joanne, yes, I do options trading as well in a very, very big way. So if you want to give us a call, options is really my wheelhouse, but we're using the intelligence of options to trade stocks first. And here's just one thing I'll finish with as well. If you want to trade options, you must know how to trade stocks. That they don't operate in some sort of separate paradigm. And we obviously can do that together. So anyway, oviearnings.com/EMC Summit. Thank you very, very much. Sorry, Jeff. I'll buy you breakfast.
Jeff is fine, I'm sure.
Thank you. By the way, can I just say big thank you to you guys? I really had a blast. That was good fun. Thank you so much. And by the way, I got to say, I want to do my own summit now. I'm coming for you.